Hello everyone, this is Jim from the Art of Finance. Welcome back to our channel. We are with you on 6th of January afternoon analysis. Before we start, I will just share with you recent reports from US. Trade balance is really high, at record levels. It's minus $80 billion trade deficit in US for the recent month. And we have received this morning inflation prel for Germany. It was more than expected. Expected was 5.1 and it was released as 5.3. And we have received unemployment benefit claims, and it is slightly higher than previous one. It's just 207,000. And so this is still manageable and is still low than expected for recent months. All right, this was the data, and labor shortage is going on in the US, and we see this effect, and that's why we see low level unemployment in manufacturing sector is not improving. That's the most important part. A lot of things are being imported right now, and this is creating problems, and then the supply bottlenecks, they are dependent on the imports. If they just go on like this, we will see a lot of inflation pressure on goods like that. All right, this was the news for macroeconomical data. So let's start with our first chart. The first chart is Canadian dollar and Japanese yen. Canadian dollar is just rising against Japanese yen until 4th of January, and it started to decline. It has started really high levels, but in Japan, Bank of Japan said, all right, we have to just check our monetary policy. We have issued the biggest stimulus package, but yeah, we still manage the value of our currency. After this speech, Japanese yen started to get some gains, some valuation against all counterparts. Canadian Japanese yen is also one of them. As you can see here, it is just tested high levels and it is declining right now. So it will just go something like this, and then it will test this support level first. If it can just stay on here, it may just make another high level. But if it doesn't work, if the level doesn't work, it will just go on to lower levels, but it won't be so fast probably, because as I said, Japanese central bank has issued at the end of November the biggest stimulus package of all their history. So that means a lot of Japanese yen is being sent to banks, and then they are just giving loans. So it's not on tight supply. When something is not on tight supply, the value, it just goes down. All right, it was it. Let's look at our next chart, which is S&P.
You are ready to win with us. GAN Markets.
Just as expected, Nasdaq has fallen with the Fed FOMC minutes. When they just released the notes, we have seen decline in both of them. In S&P and in Nasdaq, we have seen decline. So these levels are critical. So as you can see here, this was the highest levels, and right now it's just testing 4,600 levels in SP 500 of US. So RSI also just indicating that it's on 30, and then it's oversold, and then we may see some rebound on this one. Actually, it has tried a rebound, but it didn't last long, and right now it is testing the support level again. If it doesn't stop out here, if it cannot manage to store holding here, we will see lower levels. But Yeah, on the current trading session, it just seems that this support level will just work and then consolidate some. When it will just wait for the news of tomorrow, the non-farm payroll data. If we just hear some good data from there, we may see just some rebound. Or if we just see high unemployment, I don't expect high unemployment, by the way, because there is a labor shortage. And if we just see low level of non-farm payroll, we may see some more decline in S&P 500. So please just watch out the news and then data release, and then you can just make some more profit by selling this one or buying this one according to data release. Let's look at our last chart. All right, our last chart is euro dollar. As you can see here, the tight channel of trading this currency pair is just going on, and we don't expect these to be changed because both economies are in trouble, and then COVID is just affecting all these global markets. So it's just going up and down. But the expectation of high rate hike sooner than expected. With this expectation, we have seen high level of with the expectation of that one, we have seen lower level of euro. And after FOMC notes, it started to decline, but now it's just consolidating on here. Nothing goes more than this one because some members just stated that all right, there is Omicron and other thing, but at the same time labor shortage is affecting the market, so we may see the effect of that one in coming months. We will have more job openings, and then we will see more vacancy positions in the coming months. Well, some of the members state this one, so dollar index cannot go higher in the light of expectation of this report. We will see, but right now it's just on the middle of support and resistance area. So from this point, more likely will go down with the expectation of dollar index rise. If that happens, we will see lower level of euro dollar. If it doesn't happen, we may see another test to that one. Thank you so much for watching us. We will be together on more news, and then we will cover more charts with you. Have a nice and profitable day. Bye.